Hello and welcome. This is the second video in the series, 5 of the most used strategies to trade a trend. In the first video, we dove deep into the MACD strategy, which works great to identify strong entry points for a trade, when combined with exponential moving averages. If you have not seen the MACD strategy video yet, you can find a link in the description below or click on the video in the upper right corner. Okay, but let's go back to the topic of this video, which is Bollinger Bands. Well, let's start. In this video, we'll be discussing Bollinger Bands and how to use them to find good entry points for trades. First, let's start with a brief introduction to Bollinger Bands. Developed by John Bollinger in the 1980s, Bollinger Bands are a popular technical analysis tool, used to measure market volatility. Bollinger Bands consist of 3 lines: the upper band, the lower band, and the middle band, which is a moving average. To get started, go to tradingview.com and choose your trading pair. Then, go to Indicators and type Bollinger Bands, and select this one here. Click on it, and it will be automatically added to your panel. Go to Settings and check if all the settings are preset to the right values. For our setup, correct the length to 25, the source is set to close, and standard deviation should be set to 2. Leave the offset at 0. Then go to Style. Uncheck Basis. We do not need it for this setup. Then make the upper band and lower band more visible, and also uncheck the background. Now that we have all set up and understand all components of the Bollinger Bands, let's see how it works. The upper and lower bands are typically 2 standard deviations away from the moving average, creating a range that represents the majority of the price action. The width of the bands can expand and contract based on market volatility, making them useful for identifying periods of high and low volatility. The great part about using Bollinger Bands is that the market price stays in between the bands 90 to 95% of the time. Those additional 5 to 10% creates great opportunity for a trade. But what is the most used and the most effective strategy? The answer is the price action at the bands themselves. If the price approaches the upper or lower band, this could signal an overbought or oversold condition. In this case, you could look for a potential reversal or correction in the opposite direction. So, once again, in plain English, when the price touches the lower Bollinger Band, it signals that the market is oversold and the market should go up, so it is a buy signal. For confirmation and before you enter the trade, just wait for the green candle. Conversely, when the price touches the upper Bollinger Band, it signals that the market is overbought, so it is a signal to sell. For confirmation and before you enter the trade, just wait for the red candle. Okay, so this is the theory, but as you can see, there are many touches of the bands, and only a few of them indicate good entry points. So the question is, how to identify only strong entry points and make this indicator a money machine? Bollinger Bands work best when combined with other technical tools. For the purpose of this video, we will combine it with exponential moving averages, specifically EMA 200 and EMA 50. We explained how to identify trends using exponential moving averages in our previous video. You can find the link to that video in the description below, or click on the upper right corner to watch the video. Alright, now we have brought the EMA 200, the blue line, and EMA 50, the orange line, to help us identify only strong entry points using Bollinger Bands. Note that in our trading setup, we want to trade with a trend. In the case of a bullish signal, the following 2 conditions need to be met. The first condition is that the orange EMA 50 line needs to be above the blue EMA 200 line. This confirms a bullish trend. The second condition is that the price touched the lower Bollinger Band and after a few red candles, there was a green candle, which gives us confirmation of a short trend reversal. These are a few examples. You can clearly see how powerful this bullish Bollinger setup can be in a trending market. Now, let's see how to identify this setup in a bearish trend. As mentioned before, in a bearish trend, 2 conditions also need to be met. The first condition is that the orange EMA 50 line needs to be below the blue EMA 200 line. This confirms a bearish trend. The second condition is that the price touches the upper Bollinger Band, and after a few green candles, there was a red candle, which gives us confirmation of a short trend reversal. These are a few examples of bearish signals. You can clearly see how powerful this bearish Bollinger setup is in a trending market. Well, now you have learned how to identify good entry points using the Bollinger Band setup. We hope you found this video informative and useful. Follow us to learn how other indicators work with exponential moving averages, and how to identify great entry points using them. If you have any questions or suggestions, please leave us a comment. Thanks for watching.